we have that there were some things that was due but not yet received. Okay, we have commission of 150,000 that was due but not yet received. So like I said, that money belongs to us even though it's not yet received. At the end of the day, we have to reflect it as an asset. It belongs to us even though it's not with us. So I'm going to bring in commission that is due. Okay, so this is commission that is due. All right, it's due to us but not yet paid. 150,000. Remember, we have suspended zeros. Okay, and then we are also told that we have expenses that were paid in advance. Okay, we talk about prepaid expenses as an asset and accrued income as an asset. Okay, so we have accrued income commission that was due but not yet paid, and also we have expenses that was paid in advance. General expenses was paid in advance, so we have, that's what we call prepayment. So prepaid expenses, you can call them prepayment, or accrued expenses, call them what, accruals. Okay, now so I'm going to be using prepaid general expenses. So we have prepaid. So prepaid general expenses, as given in the equation, amounted to what, 3,000 naira. We have suspended zero. So I'm just bringing in our. Now the last thing we're going to include is our what, inventory. Inventory, okay, that's our closing stock. So we have our closing inventory. Okay, and our closing inventory is given to be what, 350,000, 350. So we are adding 350,000. All right. So our total value for non-current assets is 1,948,000. Okay. Now I want to less current liabilities so I can arrive at working capital. Okay, so current liabilities, we have payables, of course, money that we're supposed to have paid. We have payables, we have bank overdraft. I talk about overdraft, right? Because the bank is showing the balance on the credit side in the trial balance. That means it's a liability. Only liabilities, income and capital can be on the credit side. So the bank, which is an asset, is showing a balance on the credit side. That is automatically is an overdraft. Okay, so an overdraft now becomes what, a liability for you. And of course, we have other liabilities from the additional information that was given. We have accrued expenses, right? Accrued expenses, and then we have prepaid income. That's income received in advance. So income received in advance, and then any accrued expenses are your liabilities. Now for the asset side, when you have prepaid expenses and then accrued income are your assets. Okay, so don't forget it. It's just more of a bit confusing. We have on the liability side, you have prepaid income that was received in advance, prepaid income, and then you have accrued expenses.